Is today's announcement what we expected? What stands out? What's new?
Mostly as we expected. Remember, the Chancellor, Jeremy Hunt, in the short time we've known him as Chancellor, what we know is that he doesn't like to surprise markets. But you've got about 11 documents on the Treasury website this morning, about 30 measures, lots of reviews. What stand out to me are that the UK is going to consult on a plan to increase the ring-fencing threshold from £25 billion to £35 billion. So not just keeping it at £25 billion as per the ski-off review, and I should say this only applies to smaller retail banks. Also, the UK is going to introduce its own rules on short selling, so not using the EU's rules. But conspicuously absent from this morning's announcement and from the trail last night are the words Big Bang 2.0. Of course, a reference to Margaret Thatcher's deregulation 30 years ago. Instead, this is to be known as the Edinburgh reforms, because the City Minister Andrew Griffith and the Chancellor Jeremy Hunt are heading north of the border later this morning to formally announce them. But it was interesting to hear Chris Haywood, the City of London Corporation policy chairman, earlier on Bloomberg TV explaining why. He says this is not the Big Bang 2.0. This is nothing to do with deregulation. He says good regulation and good growth are two sides of the same coin. It's very much a watered-down version of what Liz Truss mooted when she was Prime Minister.
OK, so watered down. So that leads to questions about how much enthusiasm there's actually going to be and to what extent it actually juices the financial sector here. But how much of it is down to Brexit?
Well, some of these deregulations, such as on ring fencing, are nothing to do with the European Union. On that in particular, we were an outlier in the UK in terms of our rules on ring fencing. We went beyond our international peers, so we didn't need Brexit to get rid of them. And remember, the UK's finance industry grew to be world leading when we were a member of the European Union. We were part of drafting the EU financial services regulations, and since leaving the bloc, talent and capital have gone to rival financial centres. So you have to ask, is it really the EU that's been holding UK finance back? I'm sure that Griffith and Hunt are going to want to answer that question later today, and also to reassure investors that these measures are going to boost growth, but not at the expense of financial stability.